Hey all, good morning. This is Raj here and welcome to ShareTreck. Today is the 16th of June, 2022. And I'd like to start off first by giving a shout out to Ishkadesh. He's one of our most early subscribers when the channel was still staying single digits. And he's got a great break. He's going to start off with crypto mining. And I wish him the very best. And from all of us, I hope he succeeds and does very well. With that said, let's look at this crazy market. Yesterday, the market went up. I thought it shouldn't because there was a 75 basis point hike, and I gave you all the reasons why the market shouldn't have gone up, but it did. Today, I think it should come down. I thought yesterday itself it would have cooled off by noon and started its way back down. But better late than never. So today, I am hoping that the market is going to come back to senses and come back down. So I'm expecting a bearish market today. Let's see what the indicators and others say. So let's get started with our daily update. Let's start off our the daily roundup of news. I've curated a few headlines that I wanted to talk to you about. Here are those headlines. The first one is Powell says the Fed could hike rates by 0.75 percentage point again in July. So when we saw yesterday's rate hike coming in, remember in my morning daily update, I was saying that there is no reason for the markets to go up. Why is it going up? And if it's eventually going to come down in the next couple of days, then what's the point? So we are going to see that come into stark contrast today because there is going to be more 75 basis point hikes. And also, I have another headline which says Bank of England set for fifth straight rate hike as growth and the pound wobble. So Bank of England is also going ahead with a 25 basis point hike, taking it to 1%. We had ECB also introducing the very first set of rate cuts as well as tightening of its balance sheet. So they are all sucking out the liquidity from the market. So there is no reason for cheer at this point of time. The whole idea is to humble the inflation so that we can get started getting back into the normal range of 2% and the central banks will start reducing interest rates and the markets will start going up. Our first model was that second and third quarter would see bank raise the interest rates, and by the end of the third quarter we'll see inflation coming down, and in the fourth quarter we'll go up. Now the only thing that has happened is that we have pushed that behind. So I'm saying that even until the middle of fourth quarter we are going to be in inflation, and probably towards the end of the year we may come up with that so-called Santa Claus rally. That could be a launch point for us. That's my current model. I'm still validating it, and I'll make a separate video on it, justifying why I think so, if that turns out to be right in my mind. Next, I have a news which says Spotify is slowing hiring by 25%. So we can already see demand destruction leading to unemployment coming up. And remember, stagflation is when inflation remains high, but unemployment also goes up. We are staring at that because if the oil price and the price of wheat and food doesn't go down, we are going to be in stagflation. So I am worried more about stagflation than recession at this point of time because of that very reason. And hopefully the meeting of European leaders with Ukraine that's happening either today or tomorrow should yield some results, and also US is sending $1 billion worth of heavy military equipment for Ukraine. Hopefully all of that brings the war to an end. Otherwise, it's going to be very difficult. I have been watching a Russian who is broadcasting live from Russia, southern Russia. I think his channel is called Inside Russia. And he has been talking about very, very serious problems. One of the things that he was mentioning in his channel is that imagine somebody is building a skyscraper and they have to build the elevator chute exactly to match the dimensions of the elevator. And the elevator was supplied by, say, Siemens, and Siemens have decided to pull out of Russia. So now the building is up, but they don't have an elevator. What are they going to do? Are they going to demolish, or how are people going to live in that building? So those kind of problems are being faced in Russia, and there is a lot of demand destruction also happening out there. So things are not looking great for Russia. It's not looking great for Ukraine. So hopefully the leaders will come to a sense and at least they would stop the hostilities and get started with getting back to normal life. If not, I think the world leaders have to really take a very hard stance on this. Having said that, this is another exciting headline that I have seen inside the US government's projects to create tiny nuclear reactors like batteries. So the idea is that for remote countries, you have these tiny nuclear reactors which can produce a good amount of power for a reasonably long duration, and they would be replaced at a later stage when they get depleted. And they can be networked along with wind and solar energy and provide renewable energy for many remote communities and get integrated into the national grid. And if that kind of a setup comes in place, then that is going to reduce the dependence on oil further, and that's going to make the environment also less polluting. And I think this is the move in the right track. With that said, I think we should go and have a quick look at NASDAQ. I would also like to add that I'm sorry that I'm doing these videos quite early. It's around 6:16 in the morning. But my little dog, Cory, she's not well. So I have to take her to the vet for an operation today. And the operation is at 10 o'clock in the morning. So wish her the very best. And I'll keep you updated on what's happening out there. Now, that said, I'm going to go and have a look at the NASDAQ and the indices. Let's go to that. So we're going to start off with the futures first. And I'm going to show you what it looks like right now. The NASDAQ is negative minus 2.47. Remember what I was telling yesterday, that the market should not be going up. It looks great, but it shouldn't be going up. I don't know why market would go up when there is a 75% interest rate hike and so many unresolved global risks. But you can see here that there were these 3 days of drop, and we couldn't resist but recover some of the losses. But immediately, this is today's candle, this is the 16th candle, the red one, it has encompassed yesterday's green, and it's already down below where we started yesterday. So those people who went in there, remember what I was saying, you have to be nimble, you have to be active, and you have to be alert. So those people would have been stuck there unless they put a call. And if they had put a call, they're going to be in the money, but once they sell the call, they are still holding their original assets. So they would have done a covered call, so they're holding original assets, and those original assets are already below the purchase price, so they are going to be negative. So the gains that you made with the calls did not compensate you adequately for the loss. So now you are holding on and waiting for the market to go up. I see a slight ray of hope out here because we are somehow consolidating out here. But let us see how this pattern goes during the day, and we'll find out, because the MACD is already bearish and the momentum is also below the average and pointing downwards. So it's not looking great for NASDAQ. It was, but to be expected. Now let's go and have a look at the indices. In the indices, I'm going to first look at US oil. US oil continues to come down, and it has broken below this bear channel. I'm just going to adjust the bear channel further down, and now we have got multiple touch points out here. So this is also a valid bear channel. We have got our MACD also bearish, and momentum is just about piercing to go below the average, and it may as well go below average today, in which case we'll try to break down below this level, in which case this will start becoming a resistance for us, and that would mean a very good deal for the market. So the oil going down is always a positive because it's going to bring down the inflation. How soon it will reflect in the QQQ is a question that I don't have an answer for. Now let's look at QQQ. QQQ was up yesterday 2.5%, but today pre-market it's down minus 2.49%. So this indicates a bear market open. We are at 6:20 a.m. if you notice. So it's rather early in the day. The MACD is already bearish, but tending towards the signal line. And we are seeing that the momentum is picking up now. And if I go to a one-day time frame and have a look at what is happening out here, we can see that the momentum is picking up slightly, but the MACD is still bearish and tending towards the signal line. Because it is below average, I cannot take this as a given. So there could still be weakness in the momentum when the market opens. And we'll see what happens. Maybe it will just go down to the next level of resistance and come up. So I'm going to go back to our favorite time frame, which is the 1 year time frame with 1 day candles, and try to make sense of what is happening out here. So we are looking at the market starting out at 275.69 or thereabouts, which will be in this diagonal line. So I think that the worst that could happen is the market, before market open, we could potentially go all the way down to somewhere around 274.92, and then we could potentially bounce off. And if we bounced off this, then we are going all the way to 288.57 and then coming back. So the movement from here all the way to 288.08 is not going to be a straight movement, but we may recover part of that today, and then we may come down, and then we may go up again. So it will be a zigzag because the volatility is still high. So we can't have a bull market at this point of time. It's going to be a volatile consolidation market. Our MACD is also bearish. Momentum is just about picking up. So we can't guarantee that it's going to be a bull action today. It is going to start off bearish, and it's potentially likely to stay bearish till the end of the day. Probably a slight pickup in the time frame between 3:30 to 4. Then looking at our VIX, you can see that the volatility is creeping up again. It's still within yesterday's range, but it is just entered the range where we were on 13th of June when the markets were still looking bad. So if we go back to 13th of June, let us see where we were on 13th of June. 13th of June was this particular candle where we were in the range of 280 to 274. Right now we are at 275. So we are likely to be mostly in the range of 275 to 280 for today, if the past is any reflection of what's going to happen with the future. Let us look at S&P 500. The S&P 500 is up 1.43 as of yesterday, but today pre-market there are still no trades, so we don't know which direction it's going to go. But you would see that on the 15th it formed a nice green doji candle. Doji is always indecision. There was a very narrow band of consensus, and the 2 weeks are pretty long. And one of the wicks appears to support at 376.38. Let us see. Yeah, 376.38. So this support is still holding for us. And this looks pretty good. This formation here for S&P 500 looks, to me, this particular pattern out here looks like a morning star pattern. If this is a morning star pattern, then it's also going to have a catalyst, because there is this gap to be filled here and another gap to be filled here. So S&P is definitely going to do better today, in my opinion. And of course, we have the overhang of another 75 basis point hike, and liquidity is being drained out here. But from a technical perspective, this looks like a morning star to me. However, what is contrary is the fact that the MACD is bearish, absolutely, and momentum is also very low. And we do have resistance at 389.67. This could also be a false kind of indicator to us. We'll see what happens as the day progresses. Now let us look at the put-call ratio. Put-call ratio has come down to 1.036. We are very close to the neutral as far as the closing of PCC was concerned for yesterday. So we don't have much clues from here. So overall, I think that we are going to start the day negative, and probably will recover some of the losses towards the end of the day. And we'll be consolidating sideways, because I don't see any reason for the market to be exuberant at this stage. And now, with that said, let's go ahead and have a look at our genomic sector. So here we have our genomic sector shares, and on the right panel, you can see CRISPR was the biggest gainer. I was totally wrong yesterday because the DNA, where is that Bluebird? Bluebird did not at all make any gains yesterday. It was down minus 2.79, and today it is going down minus 3.45. So Bluebird again has suffered from irrational exuberance. Bluebird was doing very well within these two ranges, and it was consolidating gently, but these two moves were well anticipated because they were within our range of the resistance and the support. But this 66% move upward was totally wrong, and now it is overcompensating by falling further. As you can see, pre-market we are down 3.45. So if among genomic shares anyone could have a possible turnaround, that could possibly be Bluebird, but it could still continue to go all the way down to the support like it did out here and come all the way down to 2.89 or something before then turning back around. So those who are in Bluebird are going to go for a really volatile ride. And then coming back to CRISPR Therapeutics, you can see that there are no pre-market trades, but for DNA, we have pre-market trades and it's down minus 5.41%. And if you look at Invitae, it's down minus 2.56%. Teladoc is down minus 4.17%. Allogene, no trades out there. Editas, no trades. ArcG, no trades. Verve, no trades. PACB is up 2.34%, so this is contrary. And we are looking at Beam, no trades. INTX, no trades. Caribou Biosciences, no trades. iDNA, no trades. Regeneron, no trades. Illumina, no trades. And then we have Pfizer down minus 1.98%, and Novartis down minus 0.65%, and Bluebird down minus 3.45%. And as I said before, we can't trust the pre-market completely, but overall, if you look at NASDAQ pre-market, if you look at our VIX and other indicators, they all seem to indicate that we are going to be in for a bearish start. And I forgot to do one more thing. I forgot to look at the US dollar index while we were out there. And if we look at the US dollar index, the US dollar index has gone up this morning. This is the candle for the 16th. I don't know what this red artifact is doing up here. It's just a line. I'm going to delete that. So we are US dollar index is starting to attract money back into it, and we are still within yesterday's range. So we're going to give up some of our gains. And if you look at the MACD, it is bullish. And if you look at our momentum, it's still above average, but it is flat. But overall, whenever a US dollar index goes up, it spells bad for all other asset classes. I think we also forgot to look at crypto back there. Cryptocurrency, Bitcoin is continuing to fall, and it's still respecting our support at 20,233. As you can see, we just touched out here and we moved up, and we are potentially likely to test this again because our indicators are still weak. But Bitcoin can get a bit of respite if US dollar index were to go down, but that's not what is happening. And if NASDAQ also goes down, Bitcoin is likely to suffer more weakness today. And we look at gold. Gold is also down minus 0.66%. Gold is still looking weak, but our momentum needs to pick up for gold in order for it to make any movements upward. It's being constrained by all the exponential moving average. It also has got a horizontal resistance at 184.1.26. So gold is not looking good today. And with that said, I would like to caution you to be careful in this market today. If you had bought something yesterday and if it's still in profit in the morning, I think my personal opinion, of course, this is not financial advice. Let me tell you again, it's not financial advice. I'm not always right. Most of the times, the market gets the better of me. So I'm just sharing my personal thoughts. If I had something that I bought yesterday, which is in positive when the market opens, I would either book a call or I would sell it and book the profit. So one of those two things I might do. And I suspect that the calls would give you enough premium today in the morning. So if you had taken a call out yesterday, it would be very nice for you because you'd recover at least some of the fall that is happening this morning. But this is a volatile market. It's not for the faint-hearted. It's not for the amateurs, and it's not for simple retail investors like us. So let's watch the market go down today and potentially turn a little up in the evening. With that said, I would like to end this video session here. I'll catch up again with you later today. I'll try to make one more video for the day. I have some ideas that I wanted to share with you. If you like this video, please press a like out there. It helps YouTube show our channel to more people and helps them discover our channel. And if you're not yet a subscriber, please subscribe and join our community. We'd like to help you grow this community. Take care. Have a great day. Bye for now.